Hey everybody, welcome to Stock Abilities. Today I'm going to be covering the three main reasons I believe as to why the tech market crashed recently and why a lot of them followed a very similar pattern. And one of the main things here is Goldman Sachs wants to make some free money. They downgraded a lot of tech companies, ultimately stating that they're overvalued, and of course a lot of them followed a very similar trending pattern, which I'll show in just a little bit. So make sure to like, share, subscribe to the channel, and thanks for listening in. Now we're going to go a little bit further here into this article, and as you can see, well, the Dow Jones Industrial Average gained 89 points, and the S&P 500 slipped 2 points. The tech-heavy Nasdaq fell 1.8% to 6,207 and 92 cents in the wake of the Goldman report, and a lot of other stocks crash. You got 3.3% with Facebook, Amazon 3.2%, Apple 3.9%, Microsoft 2.3%, and Alphabet was down 3.4%. What's interesting that they don't mention in this article is they all followed the very same pattern. And the interesting thing to note here is while Goldman's report associated a valuation bubble, it stopped short of predicting a tech bubble as destructive as the 2000 bust in internet stocks. The reason they're saying this is because they don't want to fearmonger it and crash it. They want to fearmonger it and then buy in and then push it back up. And you got the infrastructure plan, which I covered in a recent video as well, so I'm not going to go too much detail in this here. You got Trump here pushing an infrastructure plan, which also means a lot of money was pulled out of tech and into things like steel and all of that, and then a lot of it was pushed back right back into tech, and they'll be pumping that next week most likely. This is a lot of fluff of an article. There isn't much to really indicate one way or another what's exactly going on. You got steel pushed up and then pushed down a little bit, and then tech pushed up towards the close. All of the charts followed a very similar pattern. I'll show you in just a second. You also got the E3 Expo, Electronic Entertainment Expo 2017 on Tuesday, and some news on Monday, so there might be a bit of a pump into tech then as well. And you got to expect a correction because a lot of stocks followed a lot of similar patterns here. You got AMD at 250, you got Intel at 250, you got Netflix at 250, and all of these are popping up at 250, and it's very interesting that they all followed a very similar time frame, and that's very, very fishy in the market. Even Google and Amazon and all of them all following, even Activision, Blizzard, 250. You got the Take-Two Interactive at 250 popping up. The very same minute, all across the board. This is a very, very fishy market. Now, this one didn't follow exactly. This isn't exactly uh, a good company overall, but it came very close to following the pattern at 305 instead of 250, and it popped up and then carried on. This one as well as at 250. You got another one at 250, 250, 250, 250, as you can see. And this is a multitude of stocks. It really shouldn't be working like this. However, it was very clearly manipulated, so I would look forward to investing heavily into the tech market, at least throughout this week, or even just for day trades. There should be some very easy scalps. A lot of these were pushed down for no apparent reason. Other than that, that's about all I wanted to cover in this video and highlight just how controlled the market really is. Make sure to like this video, comment below if you have your own input on what exactly happened to the market, and don't forget to subscribe if you want more videos just like this.